We move on now to the U.S., where the stock index futures pointed to a lower open as traders reacted to the Federal Reserve's latest policy decision, and technology stocks slumped for the second time this week. As anticipated, the Fed hiked interest rates by 0.25%, but its weaker than expected inflation numbers prompted worry among investors. On the data front, Thursday will see a host of data releases, including jobless claims, the Philadelphia Fed Manufacturing Outlook Survey, the Empire State Manufacturing Survey, and import and export prices. Later in the morning, industrial production figures, the housing market index, and natural gas inventories will also be released. The numbers there, the future stocks are showing are in the red, 0.44% for Dow Jones Industrial Average, S&P 500 down 0.70%, and Nasdaq down 1.19%. In Asia, the equities closed mostly lower today after the U.S. Federal Reserve raised interest rates for the second time this year, as was widely expected by markets. Despite inflation coming in below the Fed's target, the central bank said it would raise the benchmark interest rate by 25 basis points. The Fed also provided greater details about how it would unwind its massive balance sheet. The Nikkei 225 edged lower by 0.26%, and the Kospi gave up earlier gains to close down by 0.46%. Australia's ASX 200 tumbled 1.21% to close at 5,763. That's driven by weaknesses in its materials and energy sub-indices. Markets in Greater China were mixed, with the Hang Seng Index lower by 0.95%. On the mainland, the Shanghai Composite edged higher by 0.06%, and the Shenzhen Composite rose 0.914%. And back here, investors remained upbeat in the Treasury bills market, with average yield dropping 20 basis points to 18.49%. The bond space was equally bullish, with average yield contracting 2 basis points to close at 16.72%. There was also a Treasury bill auction on Wednesday. Let's get the details from a dealer with Diamond Bank, Gbemisola Bello Aromire. Good afternoon, Gbemi. Thank you very much for joining us.
Good afternoon. Thank you for having me.
Right. So tell me, what is the outcome of yesterday's Treasury bill auctions?
Yes, at the Treasury bills auction, NTB yesterday, there was an uptick from the last auction as 238 billion was sold, with 91 days coming out higher from 13.4 at the previous auction to 13.50. The 182 days was 117.13 at the previous auction and came out at 17.30 at yesterday's auction, while the 364-day bill came out at 18.688 as against 18.65 at the last auction. We can see that markets had already priced in this yield, and also in the secondary market today, we can see yield also around those levels.
And in terms of liquidity, what will this mean for the market?
Okay, right now market is liquid as there was a maturity of 205 billion today, a net maturity, as the NTB maturity part of it was a rollover as against yesterday's PMA. So market is liquid. It is up by 205 billion. So with this, we can see a bullish market. Investors are scrambling for yields at higher maturity because of the liquidity in the system, both in the Treasury bills arm and also in the bond segment.
Now, the main inflation figures came out today. Is that having any impact on the markets today?
Yes, it has a bit of impact, even though it came out higher than what market was expecting, because the polls was expecting 16% as against the 16.3, which came in. Market had already perceived that there will be a slowdown in headline inflation for the fourth consecutive month. So even at that, it has also contributed to the bullish pattern, which we can see in the market today. So as I said earlier, investors are scrambling for yields at higher levels to help them build their portfolio. So yes, the inflation rate has a slight impact on the market today.
All right, thank you very much, Gbemisola Bello Aromire, fixed income dealer with Diamond Bank. We'll take a quick break. When we come back, we'll look at all the markets. Just stay with us.